The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time at 877-927-6648. Hey, what a session. I was about just an hour ago, I would have been saying the Dow's down over 200 and something points, S&P's down over 20. You know what? The Dow's down 66 and the S&P's down 4. Ah, unbelievable. Look at this. Here's the E-mini. Down 10. Now, this is very interesting. For a couple of days now, the E-mini has been a little deeper than the actual cash S&P. Not sure exactly what that's saying, but look at this. If I go to my 10-minute chart right here, it made a trough D, a Chapman Wave instant restart, went down to another D, and whoosh! I thought it would take until 12 o'clock to get even to test this candle right here, the candle of 20 to 7 this morning, 20 to 8 this morning, with a high of 2063 and a low of 2061. It just did it, and whoops, straight up, and it's gone all the way from 2050 to the high that we've just seen minutes ago at 2073. That's 23 points. 23 points is nothing to sneeze at. It's testing this downtrend dashed line right here. I do have a price time match that says around about 110 this afternoon. No, I'm sorry, 310 this afternoon. We could possibly get to the 2077 level. We'll see. Days young. So, and you remember, we've got that single leg A up syndrome that can fail. So we've got to be careful. Any reversal that takes you back to the 2063 level, 2063, 62, says, uh-oh, be careful. Could be a failure as sellers come back in. Now, what I said to my subscribers this morning, my opening call, we had a position that we grabbed right probably just pre-market on the three times long, the Dow. Unfortunately, we got stopped out for a 50-cent loss, a real tiny loss. I mean, it's about 0.80 or something like that. And I said, this is only for traders, because everything I was looking at said that there should be a rebound, and I was only going to treat it like a rebound. But now it's an opportunity for me to go through the markets and discuss things in a more relaxed, cohesive way. See this trend line support that the E-minis have held. That's the support from the 3rd, where it went down to 2040. On the 4th, the low was 2046.75. Today's low was 2050.25. So there's a rising series of lows that gives you very clear parameters of what to look for if there's a breakdown. Any break says you're going to go right to the 2035 level. That's the 200-period moving average. I would even say if we went down to the 2066 or lower, 2066-63 area, that would say, uh-oh, be careful. You're going to break that line. However, and this is very important, see the 120-minute chart? Got a left side, right side price time match. It came in one bar early. Nice spike to the upside. But look at the nice reversal in the stochastic. The MACD never went down very much. So this is going to say, if there is a push into the 2077 area, then that whole 2077, 2078.50 area is where the 200-period exponential moving average resistance line is. That's where you should see quite formidable resistance if it is able to get there. Now I'm going to grab this corner right here, push it down, and we're going to go through in a very systematic way what I'm looking for, why I'm looking for it, and at the same time, I'm going to discuss, let me just go right to this one right here, TFNN, front page, TFNN. Straight after this, you're going to have swimming lessons live. Think or Swim swimming lessons. That's, of course, with options, etc., with Scott Connor, Kevin Hinks, and Cindy Faber. And what we're really looking at here is that you've got the Salvation Army Tiger Dollar sale, but I am going to be doing an opening call subscriber webinar this coming Thursday night. And I often talk about these things and say whenever I plan them, I try my best to put them into the cyclical perspective that I'm looking at in terms of turnarounds in the market, etc. And this is very important because I believe that January could be a pretty sharp down move. We might start it in December. We might even have started it already. I am expecting that, and I'll explain what I'm talking about as we move along, that if there is a new, I'm going to be discussing Elliott Wave 5. That's the fifth leg, which is usually the most powerful leg. Powerful leg doesn't mean to say that it is how high it's going to go. There are other ways of doing that. It also doesn't say how long it can last, and it also doesn't say. I don't want to get into all the nitty-gritties of the different patterns that we could look for consolidations on the way. At this particular point, strictly speaking, this is still wave 4 as far as I'm concerned to the downside. And the reason why I want to discuss it is if there is a new all-time high in December by even 1 penny in the Dow, I have to consider that the Chapman wave, the reason why I want to do this is I want to discuss how I'm looking at this and saying that there's a really good chance that the Chapman wave, let me just move over here, the Chapman wave monthly charts will have recycled. I mean, it's just hard to believe that they can recycle for a whole new 4 waves to the upside. That is peak A, peak B, peak C, and peak D. But 1 penny above, and I have to consider that that's a possibility. Within that, we want to recycle, says Yo in the Dead. Within that context, at that point, for my work, Elliott Wave 5 will have begun. And that would say that the Dow 15,370 that was made the low in August will not be breached. See, why this is so important? We don't even have to make new highs. We could still be in 5, not know it until we do break out, and that breakout could come after a very sharp pullback. So this is just an extremely important moment. I'm going to discuss the dollar. I'm going to discuss gold. I'm going to discuss maybe I'll just, if I have time, it's only an hour. It's on Thursday night, 6 o'clock to 7. But what I am going to be discussing absolutely is the relationship of certain sectors, where we are, what we're doing, and why. And then I'm going to grab charts like this, if I can get it real quickly here. Oh, man, this is just amazing. Snagit editor. There it is. Look at this. I didn't show this yet to subscribers. I didn't have a chance to put it on. I will show it tomorrow, as I do. One undershaft, the tallest skyscraper in the city of London revealed. Architect Eric Parry unveils plans for tallest skyscraper in the city, but the orgy of billion-pound towers doesn't stop there. I'm telling you that this is a period that we've not seen and since the late 1920s. The match is uncanny. Does the conclusion have to be we're going to the Great Depression? I don't want to even go there. I want to talk about the phase that is the mega phase, which incidentally is going to have to be called, we can't talk mega anymore. We've gone through mega. It is giga. And not only that, look, right here in Boston, the Hilton Hotel Group has made an offer for the Mandarin Hotel so that each unit is now $1 million. Each unit. And this is the building that sold in desperation just some years ago. We are going through something that we see just once in a lifetime. And we'll talk about that. To me, it's going to be one of the most important long-term. Usually I'm talking about different cycles and all that. This is the long-term. And what are we going to do, and how are we going to try to program ourselves to be thinking along those lines? It's going to be really difficult to do when we get those very sharp sell-offs, which we've got to expect coming up in the next 6 weeks. Okay, here we go. Dow, INDU, The Dow is down 79 at 17,650. Made a low right. Oh, I love this little moving average here. I just want to double check. I don't want to, 50. Yep, that's a 50 period. Look at that 50 period. Suddenly has become quite important. I love all these different moving averages. They service, they give you a sense of what to be looking for and how you can use them as support. Now, we're nowhere. We're right in the middle of everything. Remember, I drew that thick line yesterday. I said that's the resistance line. Now I can draw a thick line going up. So we are now we've got a. So yeah, I'll call it a symmetrical triangle. It's pretty close to a symmetrical triangle. And I'm going to make it nice and thick. And I'm going to make it so that it's one solid line. And I'm going to make it so that it's got colors. Well, I don't know what color I used there. I'll use the same color. I don't even know what color I did. I think, yeah, that's it. Okay, there you got the color. And I'm going to make it nice and thick right there. Okay, so we've got a little trap. We're starting to see narrowing as this symmetrical wedge takes place. My rule of thumb, if you read books, they'll say that when you break a trend line of the triangle formation, especially symmetrical triangle, the price objective would be to the previous major peak on the left. I don't do that. I just go one peak at a time. That would be 17,901. If it can take out the Dow in the next week, can take out 17,850, somewhere around there, then you're looking at 17,901, 17,914, and finally you get to 17,977, which is not the top. If there's a failure and we start to break down, the break of this would say immediately that if you go to 17,460 in the Dow, look at 17,399 as the 200-period exponential moving average key support. And then if it breaks, you can start looking at the arch formation of 17,210. Okay, so those are the Dow parameters. I'll try to be much quicker now. I'd also like to take calls, so let me do this. There's an arch formation in the S&P, still peak C, right there. And to pierce this, I'm anticipating that there is another arch formation that's taking place. And that's going to take us to a D. The Dow, in fact, it's very interesting because the Dow Diamonds we're looking at already a peak B, and a peak C starts at 178.91. In the QQQ series, up 0.07, up 114.69, you will get leg C the moment you go to 115.76, and you're at 114.69 right now. Nice action. If you're looking at the New York Stock Exchange, remember, I've been making a big deal about this. I believe that the New York Stock Exchange is the old tech, and that you've got to be looking at the QQQ, or the NDX 100, and the Dow. Even though it sounds really weird, the Dow is essentially the new tech because of the rotation that allowed it to take in Microsoft, MSFT. Look at that. Look at that. Nice A, B, C, D. Oh, very nice action. Cisco. I'll be back. Basil Chapman, Tiger Traditions Hour. Dow's down 79. S&P's down 6. Very exciting day. Be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 90, S&P's down 7. Don't forget, you've also got Apple in the Dow, and you've got Intel. And I have to tell you that those semiconductors are holding very well. Intel is turning down 11 cents to 34.88. I'm calling this leg B, a peak B, and I think it's going to go to a C and a D. That's the way it seems to me at this particular point. And so let me just run these things down here because gold, at this particular stage, we're looking at gold coming back a little bit. It's about almost unchanged, down 1 at 10.73. This is going to be very important because you got that single leg A up. You pull back to about a 50% level. This is fine, and it's holding the 9-period exponential moving average. And is going to be very important because the dollar, you remember, I like to look at the relationship. I'm going to be discussing this relationship in my webinar on Thursday night. Let me tell you, this is very important. Now, dollar's pretty much done what we wanted to see. Let me just double check here on the 120-minute chart. It went to a peak E with a doji high. It's pulling back. I'm suspecting, and this is just a suspicion at this particular point, that the dollar is making an H pattern. It could still be, once in a while over the next week, they could still, as long as it doesn't take out 97.59 first, in between, you could have sudden spikes to the upside. But actually, all it's doing, I've got a large arch formation. Within that, there's a smaller one that I'm looking at here. I'll draw it in right there. Maximum upside I see as, I don't even know if we can get there, but I'm going to put it in anyway. is somewhere around the 99.30s. It's at 98.49. But I think that right in here, it's just trying to make another rally, to make a leg A, maybe a B, and then maybe a C, but maybe just a B, and then it turns around. That's where the big test comes. And the big test will come somewhere around, today is what date is today? Today, what did I say? Today was the 8th. So by Monday, the coming Monday, let's see what happens. Okay. Now, so my inkling at this particular point is to suspect that the resistance that we're looking at I'll go back to the dollar, do it on this chart because I want to show you the weekly as well. The resistance that we're looking at here is so powerful in the daily and so powerful in the weekly that it's just going to be some kind of a surprise. Something crazy happens, and out of a blue, you get like Friday, another spike. All I'm looking at here are sudden spikes to the upside to get rid of this excess energy. And then what I'd be looking at is when the low, the support of 17,390s to 17,200s, when that whole area gets taken out in the Dow, we start down, and we start down really suddenly and sharply. In other words, suddenly meaning that there's a news event, and that news event might spike and have a spike to the upside, but by the end of the day, you're down on the downside very sharply. Something like that gets to be the trigger, and then all of a sudden we start to see in the daily charts lower lows and lower highs. I was anticipating, and I'm still thinking it's a possibility. There's just enough residual strength to go a tad higher. That's going to make it very complicated in the Dow in terms of the waveform. It doesn't matter to me, because if there's a new high, let me put it this way. If you're looking at the SPX.X, if you're looking at the S&P, that was a G. But there is a reason to say that there's something called the Chapman wave flat base restart. I'll do more work on it. I need another day or two. So it's perfect for Thursday's webinar to say that there's a possible flat base restart, which says that regardless of how high we go in this interim period, December, wrapping up 2015, by the first week of January, we could see some kind of a reversal, and the big test will be at 1990. That's quite far down, 700 points in the Dow, 70 points in the S&P. But that means that and then once that gets taken out, you're going to start looking for a reversal to the upside very soon after that, in this particular Chapman wave methodology. Hey, eyes glaze over. I don't want to get too involved in that. Questions I had, the question I had was J&K. Well, J&K is not the walkway downtown, the J&K walkway. No, that's JFK. It is junk. It is the junk bonds that people have been asking about for about a few weeks now. Spider Barclays, high yield bond fund. I didn't call it a junk bond, but we call it a junk bond fund. It's actually JNK. Are the symbols at 34.60, down 24 cents. And what I'm really looking at here, I didn't do the notation to the downside. Trough A, trough B, trough C, D, and E, with a gap down to a doji. But I need volume to get a Chapman wave volume spike reversal. And so far the day is young, but I'm not seeing the volume. So the question is, what about it? I'll talk about that. Then I had a question about, this is a great question. We'll talk about it as soon as I get back. I had a couple of email questions, and I really want to get to it because clever question. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So, Basil Chapman, Tiger Technicians Hour. A couple of questions that I had. One was the junk bond, the Jane. Can we go back to that? What was the wave count? The wave count is on the downside. We've got leg E to a gap down to the downside. It is really close to a bounce. That's number one. Number two is if you're looking at the weekly chart is still heavily weighted towards the negative side, technically. So it's going to have to be a fabulous move in the daily that really activates some kind of reversal in the weekly. What's very important here is that the monthly chart is still very negative in the MACD, but that doesn't mean to say that that left side low that you made in October of 2011, not you, but the junk bond ETF, made in ETN, made at 34.09. That's being tested, right? As we speak, you're at 34.59. 34.53 is the low of the day. This is going to be a very important session. Week, I meant, not a session, but a session and a week. And I would not be touching it just yet. I believe that you'll have plenty of time, even if there is a sudden up spike like there was in gold. Even if there is an up spike, I believe you'll have a chance to at least hop on board for an up move, but I would not catch a falling knife. Look at this. Every time you wanted to buy it, you just went to lower lows and lower lows and lower lows. Question about oil. Is this just what was the question? Is it just a bounce in oil before going lower? Well, oil is the same sort of thing, except that it gapped down. Everybody thought, oh, great, that gap down means that we're going to be having a gap up. That'll be very... No, we just went to a lower low today. So be real careful, because we're looking at the fundamentals and the technicals are combining in the commodities to push them lower. And that takes me to the dollar right now to show you that the dollar bounced. Trading right now, let me just get, if I can get to a current one. Yeah, down 16 cents, down 12, 16 cents at 98.54, but holding quite well. And if you're looking at the dollar, I'm going to be discussing this in great detail, believe me, on Thursday night. Don't forget, Wednesday night, tomorrow night, I am talking at the Boston Investors Group at MIT over in Cambridge. So check that out. You can just go to the front page of, no, you can go to BostonInvestorsGroup.com, or just check it out at Google it, and you'll find all the information there. I'm really looking forward to that, as well, as I always do. Now, let's just do this. Before we do anything else, I just wanted to say that there's one question that's really good. I want to get to it certainly by the end of the session today. Today by my show. Travis asked a great question. I'll get to it. It's about Elliott Wave. I want to go to Shivan in Boston first. Shivan, how are you?
Good, Basil. How are you today?
I'm very well, thank you.
Yeah, I'm following up on our conversation a few weeks ago regarding Valet, V-A-L-E.
Yes.
And is it time to jump in, or it's too early?
So,
if you are going for long term.
Yeah, if you remember what I said. What I said before was that the way that Valet is acting, and this is in the commodity area. It is, of course, I should know, but we've spoken about it for years and years. What's their major focus?
I'm sorry?
They are, is it copper or gold? They're involved in they're involved in iron what? Something.
Iron and ore. Iron and ore.
Okay, got it. Yes. Okay. So what I'm looking at, you see the candle today? Really nice candle. It's done that many times, where it's gone from the low of the day to a very nice candle, and it's gapped down. So this is what I'm going to suggest. The stock is at $3.12.
Yeah.
Unless you're going to unless you're going to buy 10 or 20,000, if you're buying 100, it doesn't. It could double or triple. It's not going to do very much to anyone's portfolio. It's very nice, but you've got to treat it like an option in that case. So my recommendation here, because the way that the monthly and the way that the weekly charts are unfolding, the technicals, it's saying that it isn't done yet going to the downside, but at any point it could have a spike to the upside, and that would be a very nice percentage. But the timing is critical, because at three, we spoke about it when it was, I think, almost $4, or maybe a little more than $4. Now it's at $3.12. Well, that is a 25% haircut. Nobody needs that. So even if you're looking at it, and what I'd say to you is, well, even if you're looking at it long term, in the interim, 10, 15%, I could handle that with no problem if I feel that I've got a double in the stock. But when it gets to $3.12, all it needs to get to is $2.50, and you're looking at, it could be a long time before it gets to back where we thought it would be. So here's what I'm going to recommend. One of two things can happen in this area right now. And let me just do this one more time. I did this. In fact, I looked at it just recently, and I got a nice little peak A, peak B, peak C, peak D, and then it plopped down, and then it pulled back, and it went very quickly to an A and a B, and then it failed again. So I'm looking at it, and I'm trying to do some kind of a measured move to say, where about on the daily chart would I be able to look for some kind of support? And then when I went to the monthly chart, I have to squeeze this chart closed, and it isn't until I go back to 2004 that I'm in the threes, and then 2003 where it's in the 296 to 332 area. And that is a really long time, because it's been all the way to $44, $43. I mean, this is, that's a heck of a move, right? To the downside.
Yeah, absolutely.
So something is going on. I mean, in reality, I'd be looking at this chart and I'd be saying, you know what? I think this company could go bankrupt, because it's I don't know it fundamentally, but just chart-wise, there's no strength there whatsoever. So here's what I'm going to look at. I'm going to suggest to you that let it bounce one more time, and if it can bounce, 338 is the 9-period moving average. Folks, we're looking at Valet. We're trading at VALE, trading at 3.11, down 11 cents, down 3.52%. I mean, these are big percentage numbers because most people, when they're going to buy something at $3, they want to turn it into a $30 stock, so they're going to buy a lot. And I'm really, in this particular era of deflation, I realize that the Fed could actually kick off a period where it looks like we're starting to get some inflation again. But if you're looking at crude oil and you're looking at even gold, which should now be, it should have had a fabulous follow through already from the spike on Friday, and it hasn't yet done it. I'm looking at it, and my analysis of the dollar is that it's so strong that it could pull back, but I think it could go much higher later. I'm going to make the suggestion that at 311, fine, and the low today was 2.99. So it's already gone under $3. Let it bounce, and then when it pulls back, if it's starting to not even break today's high of 312, in other words, if it can bounce to 328, maybe even touch the 9-period moving average, and then it pulls back, and suddenly for 2 days, it just doesn't want to go down further, give me a call and we'll look at it together, because that's the first time that I would say to you, the technicals and the MACD are right in the position where they could start to rally. The histogram of the MACD is starting to improve a little bit, so this could be where you get your first decent bounce in Valet, but I would prefer to get it on the second attempt at breaking to a new low that doesn't make a new low. You understand what I'm saying? That I want a little bit of an arch formation, a bounce. And then if today's low of 299 can hold, then I'm looking at something. I prefer not even to go to a lower than 304. And if that can hold, I'm going to say to you, okay, Shivan, now you can start a small position, which you might add to if it can hold above the 9-period moving average of $3.38 for 2 days in a row. You can add a little bit more, and you'll just incrementally get a position. I would not go full in, but I would definitely start a little position if those are the criteria that are met. So let me clarify. Valet at 311 has made a low today of 299. If it doesn't take out 299 tomorrow or the next day, but instead bounces and it can get to maybe $3.26, somewhere around there, and it can hold and maybe even touch the 9-period moving average of 338, and then pull back for leg A and then peak A, and that peak A holds very nicely above 304, 306, somewhere around there, then call me and we'll look at it, and I'm going to say to you, start a position, but it's a very small position. I might even say start a position, but your stop has to be, and I'll give you a stop. But in the meantime, that's the way I'd look at it. Have a little patience. I think we're getting close to a nice bounce, but I have to treat it only as a bounce. This is not a full position. It's not an intermediate term position. It's a short-term position, waiting to see if it can be established as a more 3 to 6 week bounce.
But
Hope that helps.
Isn't it sooner or later like to all neither iron and ore to the for the infrastructure? So then that will be a good play.
That is part of what I'd be looking at. I'm going to mention it just in passing on Thursday if I have time in my webinar. I'm going to be looking at aluminum, steel, and maybe the ore. I'm going to be looking at it as if to say, if we are going to go into a period, a mega period of more skyscrapers and higher stock prices, then I would have to start to include the aluminums and the steels. But I need to see how this is a very important week, because you've got next week with the Fed. If that starts a little inflationary run, then you will see these commodities start to rally. That's why I'm saying give it a few days, maybe Friday we look at it again, Thursday, Friday, and we see what happens, okay?
When you get there's a chance, could you able to talk when you have time, Petrobras, PBR, later?
What's the symbol again?
Petrobras, PBR.
PBR. Okay, I've got some callers waiting, so I'll try to do that before the show or tomorrow, okay?
Excellent. Thank you.
Okay. Thank you very much
All
for
right.
calling. Always appreciate it. Shivan
No
in Boston. Let's go to Mark in Fort Collins, Colorado. Hi, Mark. How are you?
Hey, Basil, how you doing?
I'm well, thank you.
Good. Hey, I see we got that SOXL corrected. Question.
Thank you. Yes. Let me just mention, folks, I've been using the SOXS for some reason. I don't know why I kept saying that it was the 3 times, because it was just moving so fantastically and made us a lot of money in the opening call. And it just, for some reason, I don't know why I kept thinking of it as the 3 times long the semiconductors. Of course, it's not. SOXL is. So, yes, let's get on to your question.
Yeah, so the trend had a pretty good spike this morning over 2. I was wondering if the bounce that we've already saw in the market kind of got usurped, or that usurped that high trend reading, or if you usually have to wait till a day or 2 out.
Well, I was actually not going to say anything about it until tomorrow morning, because I wanted to see how the day closed, because that was a spectacular run, 20-something points in the S&P. And after you got the chin, the Richard Arms short-term trading index, which I call the Chapman wave chin gauge because I use it in a specific way, hit 2.56 today. That's very. You see, what I'm looking at, Mark, if you're looking at the trend, if you're looking at the VIX index from the other day, it's really unusual to see the type of spikes that we've had when the Dow, not necessarily the Dow, but the general market is dropping, but it isn't really collapsing per se. So you had that huge spike to 1935 the other day. Then after that, we got that 300 and something point spike in the Dow. So I'm looking at this and I'm saying people are getting really, really nervous, and you're getting. Look, I'm going to just show something right now, and I think this pertains to your question. Look at this Dow chart I've got right here, which I show subscribers every single day. I said to them, we are stuck in this trading range, and if we were to break the 9-period exponential moving average today, because of yesterday's close, and go down to the 17,000, here it is. What did I say? If you go to support at 17,630 to 17,600, cannot be retested here. Why? Because if it is retested, then the 17,390s becomes the key 200-period exponential moving average support, and you've got to be careful. And we almost went down. We went down today to 17,485. We held above the 17,425 low of 4 days ago. But if you think about the noise factor that we're looking at right now, look at all the noise. I'm waiting to see what the volume is today, and you will see in every one of these black candles here, you will see a big volume spike. And the biggest volume spike was that turnaround that we got after the very bad day on the 13th. You got a big spike, and then all of a sudden you got an even bigger spike with a reversal to the upside. But then again, on even the little weekdays that we've had, look at that candle of the 30th, just a small down day, and look at the volume increase. So the nervousness is rife. That's number one, which means that we're starting to see the sentiment figures shoot up very quickly. And when you think that the futures this morning were down 180 in the futures, and now the Dow's, I'm going to say only, it's not really only, but it's down 144. The S&P's down 12. We had a fabulous spike. Spike's losing energy. It's coming back down again. And one of the reasons why I'm hoping now to lighten up on longs and shorts, and maybe not so much the shorts, but certainly on the long positions in my opening call, is because there's a big fight going on. And if you've got a moment, I'll give you the relationship that I'm looking at to the trend and the VIX in a moment. Can you hold on?
Sure.
Okay, sure. We've got Mark in Fort Collins. I'll be right back. Dow's on 104.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So we're back. So this is what I wanted to do. We've got Mark and Fort Collins. A great question about the trend. Yes, the trend. It's going to be very difficult to decipher whether or not that was the action that I expect from my trend gauge, that within 2 days you get a very sharp S&P rally, S&P futures rally that translates into the cash indices following. So we might have been done with that. It's going to be real difficult to say. My thinking here is that there's still a little more buying within the market. And it doesn't mean to say that. A question yesterday I had was I a bull? Was I a bull or a bear? I am looking for slightly higher prices, and then I think we're going to go down quite sharply. That's the way I'm looking at it. So I don't know how to explain that other than to say on a very short-term basis, there is still some upside that I think is unfulfilled. And I don't think this is it's real tough to see how we're going to make an all-time high in December the way it's whipping around right now. But I'm waiting for certain parameters to be fulfilled in the Chapman wave methodology. That's number one. So your question was, have we already used up that particular thesis of within 2 days is a very sharp move. In a way, you've already done it. But I still see some residual strength. I don't know if it'll be as great, but I do see enough strength. So the only way I can answer it is it looks like we have, but there could still be another bout of buying coming in. I'm not trying to be, this is the way it is. So I don't know if that helps you, but what I also wanted to say is that the VIX index right now, we've made a really big give back of the gains that were made on Friday, and the VIX is at 1758. And all I can say is if the VIX this week starts to go into the 19s, we're on our way down already. If all of a sudden there's a reversal and it goes back to the 1650 or lower area, that allows enough strength to move higher. So those are the parameters I'm looking at. Hope that helps you.
Yeah, it does, and it's real interesting how strong Apple's been, and despite the way the market's been moving, it looks like that wants to.
Well, it's holding well. Let's put it that way. And I think that's what we're looking at here. I'm looking at Microsoft. I'm looking at a number of just enough issues here to fulfill a little bit further for the upside. Hope that helps you.
It does. Thanks, Basil. Thanks.
Thank you very much. So this is what I wanted to say, folks. Just there's still time. If you want, go to my webinar on Thursday night. This is a perfect time. You get it's a free webinar, but you can also start building up a kitty with Tiger dollars that are tax deductible. Look at the front page of TFNN. You got the swim. You got your next swim lesson coming up. Great swim lesson yesterday. Another one today. Stay tuned for that. And let me just do a couple of things here that I want to do as we're about to wrap up. Actually, with many more. I had a whole bunch of questions. I'm sorry I can't get to it. Travis, the only way I'm going to be able to do that, I'm going to try to answer that question about the single leg A up. I'll try to do that in the webinar as well. It's a little more complex. It's really more for direct personal talking rather than just a generalized thing. So let me just go back to the Dow. If the Dow is able to get back, I think it's used up a lot of its energy to the upside and the downside today. It might just meander at 137. We might close today either at minus 155 or minus 187, something like that, and just kind of be stuck in this narrowing wedge. So keep an eye on that. And you're under the 9-period exponential moving average with the MACD negative, stochastics now at 65%. We're losing upside technical energy in the Dow. I'm talking about certain stocks giving enough energy just to be able to spike a little higher. Just to confuse everyone, look at this chart here. If I go back to this one here, it's a little easier to see. Look at that trading range we've been in. This is, remember my expression, rectangle formations can last a lot longer than your patience. Look how long we've been trading between 17, let's call it 18,000 and 17,200 for 2 months. That's a long time to be in this narrow range. If this was Elliott Wave, we'd be looking at a zigzag. I'll be discussing it all when we're coming up on Thursday night. And I'll be back tomorrow. Oh, I'll be back with Tom a little later today, I believe. I must check that out. Have a great day. Speak to you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.